Get the PDF for free at fintubedigest.com. Here you see the website. The first 2 products are completely free. If you go to the subscription download page, the Adobe Results Special, as well as the 60 stocks to buy and the 10 stocks to buy, are in the normal download section. The SaaSpocalypse is in the premium one. So if you look at Adobe Results, if you click on it, if you have a subscription, you get immediately the document. Okay, so we go through the results, one pager. Financial key figures, revenue. Adobe achieved a revenue of 6.4 billion in the first quarter of 2026, which is a 12% year-over-year growth. They have an earnings per share. The GAAP earnings were 4.60 per share. Non-GAAP earnings were 6 per share. 6.06. It was a 19% year-over-year increase. They had a record amount of 2.69 billion operating cash flow. The annual recurring revenue was 26.06 billion, which grew 11%. Users and adoption, total number of users, they reached a milestone of 850 million active users across their products Acrobat, Creative Cloud, Express and Firefly. Creative Premium, those are premium users within the creator segment. They grew by 50% to more than 80 million. So Adobe is clearly still growing a lot. Adobe Express, the number of active Express users, they tripled year over year. The tool is now used by 99% of the Fortune 500 companies, which is very big. So they will not replace it very soon. AI performance monetization, AI revenue, it tripled also year over year. Firefly, especially, they exceeded 250 million, which is a 70% increase compared to the previous quarter. Credit consumption. So Adobe also, just like other AIs, start with generative credit consumption. It increased by more than 45% quarter over quarter, and consumption for video AI grew by more than 8x. Looking at the strategic developments, there is CEO transition. So the most significant announcement was that Shantanu Narayan departure as CEO has been announced, which he goes away after 18 years. He will remain in this role until a successor is found and will stay on as chair of the board of directors, so he won't go away completely. Share buyback, they repurchased 8.1 million shares. There is still 3.89 billion remaining from the current buyback program, so they didn't stop. Which is logical because the stock is down a lot and they might gain a lot on the buybacks also. And the traditional stock business, stock photos, that's a bad point. It declined faster than expected due to the rapid emergence and adoption of generative AI. If you buy or have a subscription to our documents, you can click here on the links to directly go to the investor relation page, quarterly earnings, financial data, and the SEC filings they did, or you can listen to the conference call on YouTube. We've put all links into the documents. We are not financial advisors. We collect, organize, summarize publicly available content into ebooks. That way, YouTube is a fast environment. You can read it slowly. You can click on the links. Also on the links below, what does YouTube say about the earnings? So we looked at all these YouTube movies. You can click on them of various YouTube channels. We looked at the consensus which can be found within those videos. If we look at the consensus, the first one we see is we call it Adobe's paradox, because it's a bit a strange situation. The company reports record revenues of 6.5 billion, sees impressive 70% growth in active users, but the stock price has fallen more than 50% of its peak. Investors are a bit paralyzed by the fear of AI disruption, but the fundamental numbers point to a company which is stronger than ever. At this point, there's an announcement of a CEO change, and that gives uncertainty, so it plunges investors into more uncertainty. Is it a buy or not? If you look at all the YouTube content, the consensus is that it's fundamentally rock solid, but the sentiment is a bit toxic, but almost everyone thinks it is a rare buying opportunity. The bear case, the market fears that AI will lower the barrier to creativity so much that professionals will no longer need it. Also, the stock business is shrinking faster than expected due to AI generation. We think that if the truth lies somewhere in the middle, the stock price is undervalued for the long term. In the short term, it could even drop lower. You'll see it a bit further. The great transition from old to new leadership. Maybe it's good that the CEO changes, but the market hopes for a leader who will aggressively focus on AI and definitely transform Adobe into an AI first company. They are shifting a bit from a revenue model to more an AI strategy. So they use a credit model, just like other AI tools. If you want special tools within Adobe, you need to pay a bit more and you get to buy credits, or you get a certain amount of credits with certain types of subscriptions. So revenue from the credits and AI tool have more than tripled year over year. So it seems to be paying off good for Adobe. Looking at the concurrent software